morning, ladies and gentlemen. Vasil Dikov here, Senior Account Manager with GDMFX. I'll be bringing you today's market outlook. We'll start with the North American markets. Yesterday we had the trade balance from the US, which came 1.1 billion weaker than the previous at $40.40 billion. The Markit Services PMI was 0.7 better than expected at 52.8. The Markit PMI Composite was at 52.4. The factory orders for the month was 0.5% better than expected at 1.1%. The ISM non-manufacturing PMI was 3 points better than expected at 55.7. The Canadian dollar had its biggest two-day slide in more than 15 months as the country's trade deficit widened to a record in March. The Loonie slide was 1.1% versus the US dollar. The Dow was 108 points down, the Nasdaq 27 points down. The US dollar versus the Canadian dollar was 165 pips up. Today we're going to have the initial jobless claims from the USA. Moving on to Europe, the German Markit PMI Composite for April was 0.2 weaker than expected at 53.8. The German Markit Services PMI for April was 0.1 weaker than expected at 54.6. Markit Services PMI from Europe 0.1 weaker than expected at 53.2, and the Markit PMI Composite unchanged at 53 for Europe. The DAX 30 was down with 113 points. The CAC 40 was down with 47 points. The euro versus the Canadian dollar was up with 172 pips. Today we're going to have the economic bulletin from the European Union. Moving on to the United Kingdom, the PMI construction was 2 points weaker than expected at 52, and the sterling slid to a week low after construction data showed contraction in that field of the economy. As well, after Tuesday's disappointing manufacturing report, the pound fell with 0.4% versus the dollar and 0.4% versus the euro. The biggest mover was the pound versus the Canadian dollar, which moved with 175 pips up and had a 245 pips range. The FTSE lost 70 points yet and closed at 6,074 yesterday. Till the rest of the week, we're going to have the Markit Services PMI. Moving on to Asia, we have the Caixin China Services PMI 1.2 points weaker than expected at 51.8. Asian shares slid for a 7-day, their longest losing streak of the year, and the dollar extended gains versus the yen. Australia's currency strengthened after the retail sales and trade figures beat estimates, while crude oil climbed towards $45 a barrel. China, the largest gold producer and consumer, is simplifying procedures to cross-border trade, a move that may speed up imports. The central bank and customs will allow companies that have frequent imports and exports of gold and gold products to apply for a single permit that can be used in as many of 12 shipments. The People's Bank of China said the trial to simplify the rules takes effect June 1st and applies to Beijing, Shanghai, Guangzhou, Guangdong, Nanjing, Shenzhen, it said a statement. Gold consumption in China has been expanding as rising incomes and economic growth boost purchases of jewelry, bars and coins. Demand outstrips domestic supply and mainland imports bullion from Switzerland, Hong Kong and other locations. The central bank also adds to holdings every month to diversify its foreign exchange reserves. Prices have jumped 20% this year of the Shanghai Gold Exchange, about the same pace as the increase in global rates early to make another move after implementing the negative rate a couple of months ago. The Bank of Japan will be data dependent and is expected to bolster more stimulus at the June meeting. The US dollar versus the the Chinese yuan was 128 pips up. The Canadian dollar versus the Japanese yen 85 pips down. In the Pacific, in Australia, the exports were 5% better than previous at 4%. The imports were 1% better than previous at 1%. Trade balance was 727,000 better than expected at 2.163 million. Retail sales for the month was 0.1% better than expected at 0.4. And moving on to the commodity section of the market, crude oil stocks change increased by 2.8 million barrels for the week ending on April the 29th in comparison with the previous week at 543.4 million barrels. US crude oil inventories are at the historical high levels for this time of year. Crude futures were mixed on Wednesday, pairing some gains from earlier in the season as investors digested the sharpest one-week production decline in the US production in nearly a year and a stronger than expected build in domestic crude stockpiles last week. Crude oil prices soared in Asia on Thursday as regional investors took a drop in US production as bullish. Gold fell considerably on Wednesday but remained near 15-month highs as mixed bag of US economic data provided few indication on the long-term path of the economy, potentially leaving the Federal Reserve at an impasse while it waits the timing of its next interest rate hike. Gold prices gained in Asia on Thursday, with investors cautious ahead of the end of the week's jobs report that will provide clarity on the prospects for the Fed rate hikes going forward. The S&P 500 index had a range of 21 points down to 2,052 right now. Gold had a range of $18 down to 1,282 right now. Silver had a range of 30 cents at $17.43. Crude oil had a 1.60 range up to 44.56 right now. Natural gas is trading at $2.20 at the moment with a range of 9 cents. Today we're going to have the EIA natural gas storage change, and on Friday the Baker Hughes oil recount. That is all from me. Thank you and have a nice day.